This conference will now be recorded.
Hello and welcome, and thank you for coming to this webinar this afternoon on what are leading banking brands positioning and prioritising to drive a better self-service digital experience. My name is Jared Farrell and I'm the CEO of Global Reviews. To tell you a little bit about Global Reviews very quickly, in case you're not familiar with us, Global Reviews was founded in 2000, which means that we are 20 years young this year. The type of work that we complete with our clients is essentially around optimizing the digital experience, and we provide evidence-led competitive views of our clients' digital performance globally and how to improve it. Key areas that we focus on are acquisition and in-market prospects. For example, why are customers visiting your site, considering your products, but ultimately going and choosing a competitor? And within your prioritized optimization roadmap, what will deliver the greatest return on investment by target group? We provide optimization programs that are underpinned by sprint methodologies, so we work in partnership with our clients dependent on what it is that they're trying to achieve and where they are in their evolution and roadmap. We work across multiple markets around the world, and we specialize in key industry verticals. The key industry that we're talking about in this particular session is obviously banking and finance. The insights that we're talking about today come from a particular solution that we provide, which is called Compass, which you can see how it sits within our overall product wheel. With this particular solution, Compass, and recent results from banking in terms of Compass, we are going to be looking at the performance across 21 banking brands around the world in 3 different countries. As part of this particular study, we interviewed 2,500 consumers of banks, and so we're talking about the primary bank that they bank with. And we also went in and looked at the features which are being provided within the member area of these banks, including the native app. And we audited 10,500 features in terms of service delivery and which banks have what features and how are they actually deploying them. So ultimately where that actually brings us to is a deep digital service feature and function audit across all channels and the online banking experience that these banks are providing. In each one of these banks, we're looking at 500 criteria dependent on whether there are native apps and the different elements that are available. A key part of that methodology then is for us to understand with these features that we're measuring, how important and how desirable are these features to the consumers who will be interacting with these features. And to achieve that, we complete a representative survey or online survey with 1,000 consumers, which is nationally demographically representative. So this is a key component in terms of the development of what we call a desirability index, which we use to inform the weighting and digital maturity. For this particular session today, I'm going to be talking about 4 key insights: how to diagnose the current digital maturity performance, developing an evidence-led approach to prioritization, what current trends are driving new experiences for customers, and digital will enhance cost savings, but what is the future? What is the strategic view of digital in terms of innovation and where it can take us to? So talking about the first one, how do we diagnose our current digital maturity performance and what is the approach that we should take? When we work with clients, a lot of the time, the types of situations that we are encountering is teams that are sitting around a table talking about where they think innovation should occur in terms of digital service experience and digital design, based on opinions or based on what's coming into the call center or based on what the CEO might believe or what senior management might believe or based on the advertising the competitors are doing and our client, the brand, thinking, well, our competitor is doing that, so we should do that. So ultimately, one of the key things is to understand who are we actually innovating for. And so one of the approaches that's key to this is to understand your audience and to understand what makes your audience different from the general overall sample, as in the general consumers, and what is it specifically that's going to make their lives easier. So one of the things that we look at, and one of the things which is important to understand, is things like the diffusion of innovation model. So the audience that you're innovating for and how you're measuring your maturity must align with who it is that you're actually developing the experience for. So for example, if we're developing an experience for laggards, is their level of expectation in terms of the different types of feature set which is available different from those who are within the early adopter space? And we would expect that it is. But what are the key things for laggards when it comes to interacting with a banking environment? Do they want some of the functionality which is being provided by some of the fintechs that we're seeing more recently? So the first point really in terms of understanding the digital maturity is understanding who are we actually innovating for. So if we take that concept a little bit further in terms of the diffusion of innovation and we look at some results, we can see that laggards themselves, 59% use or claim to use the online facilities provided by their primary bank, and they rate the experience at 6.6 out of 10. If we look at the late majority, 69% use online facilities by their primary bank, and they rate the experience at 7.4. The early majority, so we're now getting to those who are much more interested in innovation and being first to start trialing new types and ways in which to do things from a technical point of view. The early majority, 80% use online facilities provided by their primary bank, and they rate the experience at 8. While the early adopters, those who are the first really to adopt new technology, 84% use online facilities provided by their primary bank, and they rate the experience at 8.2. So there seems to be a correlation here, which is between the adoption of technology and the usage of the online environment and what score or how they are rating the performance of their bank. So really this would suggest to us one of the key things to understand in terms of digital maturity is that point around, is it that our members are not familiar with our services? Is that the reason why that we're getting a 6.6 score? Which means that it's really more a marketing challenge rather than an innovation challenge. Well, it can be a notification challenge as well, which sits within digital innovation as well. Or is it around that they have high familiarity and are heavy users, but they believe that our service is not great and they rate us at 6.6. And that then would be a digital innovation challenge. So the key thing is understanding what is happening with regards to our digital maturity and who are we innovating for. So when we look at the question, thinking specifically about the online services provided by your primary bank, on a scale to 1 to 10, what extent does the bank's online service meet your needs? It's not surprising then to see that laggards score at 6.7 and the late majority score at 7.2. But what is interesting is that early adopters and early majority scored the same. And so bear that number in mind, because that's a number that we're going to think about and look at again in a moment. So if we have 500 features that we're measuring in terms of self-service features that consumers can use to look after their account and to manage their bank account online, what are the top 10? So we can see here the number one, when we take the disaggregated importance score on a scale of 1 to 10 and the disaggregated desirability score on a scale of 1 to 10 and multiply them together to create the desirability index, we can see that the ability to save or add biller information to my account is the number one most important and desirable. The ability to report a lost or stolen card from my account area is number 2. The ability to see all accounts with balances at once in one place. So that single touch in terms of my net worth and my financial health. The ability to order a replacement card, the ability to search payee information, the ability to reset your login password. And so the key thing that we're seeing from this top 10 is that there are lots of different types of functionality. Some of them are things that we may only want to do once every now and then, whereas others are things that we would expect should be available all of the time as we come in and out. And so thinking about that audience piece again, we really need to understand who are we designing for, because these elements within the top 10 will change depending on the audience that we're looking to design for. And also the level of expectation that is required for each of the different audiences that we're innovating for will also change. So we know that the early adopters and innovators are going to have higher expectations in general because of the ways in which they adopt technology. So when we take the full 500 criteria and we look at the average importance and we look at the average desirability and we apply an early adopter lens on top of that and look at just the results of the early adopter, it's not surprising to see that the early adopters on this particular chart on screen are more demanding and have higher expectations. But what is interesting is the distance between the early majority and the early adopter. So this tells us that the early majority is much less demanding and has lower expectations in terms of the desirability and importance of features which are going to be delivered. But if you recall on a slide that we saw previously, the early majority and the early adopters were scoring both at 8. So you have to do less to please the early majority. You have to do more to keep up to pace with what the early adopters are looking for. And so that's important if you are a brand who's trying to decide where should you be prioritizing your investment. Because if you go to prioritize investment with the early adopter in mind, you are going down a road which means that it is an ongoing engagement where you will need to be ahead of everybody else. It is going to be an investment intensive strategic decision, and it will put you in a place in terms of differentiation, which means that you are to be first to market with various different types of elements, because that is what your audience will expect of you. And then not surprising to find laggards way down on the left-hand corner in terms of desirability and importance. So what's interesting then, if we say, okay, the early majority are who we actually want to design for, we now want to understand the individual criteria that are important to them in terms of desirability and importance, so that we know that our innovation is focused on very specific elements that is going to meet their needs. And also we know what we can bring to market in terms of marketing and advertising to say, well, we have these features and we know that these are the type of things that they want. So without going through all of them, to give you a couple of examples, the ability to add biller and pay information, the ability to query a transaction through my account, and the ability to see all accounts with balances in one place up in the top right-hand segment, which is most desirable, most important. And down in the bottom left-hand, we can see ability to communicate with a bank through social media, camera pay, the ability to pay someone through a camera code, least important, least desirable. And then over on the right-hand side, the hygiene. They're really important, but they're not really as desirable. So the ability to open a savings account or an online tool that helps you select the right savings account for you. So understanding your audience is key. And in this instance, this chart tells us that in comparison to early adopters, where 46% of features are above average importance and desirability, the early majority have just 41% are above average importance and desirability, which indicates that piece in terms of lower levels of expectation. So why is this important from a commercial point of view? How do we know that this innovation is actually going to move either an acquisition or a retention needle that we're interested in? So when we look at the question, how important is the quality of the digital service offering to your primary bank provides in choosing them as your primary bank, and this is claimed behavior, we can see on a 10-point scale that for early adopters, it comes in at 5.9, and for the early majority, it comes in at 5.7. And so for those early adopters and early majority, it is more important, and they're claiming that it is more likely that it will cause them to think about who they go with. And then to just give you a quotation, there are some quotations peppered through the slides. To be flexible, to be able to get flexibility and be able to do this outside of business hours, less time consuming and easy to use, was a reason for an early adopter to want certain types of features and functionality which exists in the member service environment. So now moving on to the second key area of insights covered in this session. Developing an evidence-led approach to prioritization is key. So we talked about this piece about opinion-based or based on advertising of competitors. Well, how do we take an approach really that is more robust and more regimented in terms of the evidence that is provided to drive the decisions from a prioritized roadmap point of view? So looking at the 21 brands we mentioned earlier on and looking at the performance of these brands, we can see the Commonwealth Bank of Australia sits up there at the top, well ahead of brands like N26, Monzo and Up. Essentially what this chart shows us is that we talked about 500 features. We know the importance of these features to people because we have applied a desirability index, if you remember the importance and desirability piece. And so what we're doing now is we've gone in and audited all of these different banks and said, okay, these are the features that they provide in their native app, in their online banking, mobile, web, and desktop web. And we now know exactly what feature they provide, multiplied by the value of that feature, all added up together, gives us a top level performance score. So I want to talk a little bit about the story of CBA and ANZ. There's a bit of a gap there between them, and it'd be interesting to understand why, because ANZ are considered in the top 4 in Australia and CBA are as well. So what is it that separates them from a digital maturity point of view? Just a note on N26, Up and Monzo. Essentially N26, Up and Monzo, which are down on the bottom left-hand corner of this chart on screen at the moment. What we find when we audit brands like Monzo, Up and N26 is that they are very specific in terms of the feature experience that they offer. They are tailored to a very particular type of proposition, and they do not have the richness of full feature set which would be available from a more traditional bank like Lloyds, like Barclays, like CBA, like ANZ. And that's the reason why they're down on the bottom left-hand corner. However, it's also really important to note that if we looked at this chart here, which is the total sample on the basis of just those who are early adopters or just those who are interested in native app, this picture would change, because the importance of features on an app to those who use an app are going to be more important than to those who don't. And those kind of metrics will affect this chart. So what is this chart? What we are looking at here on the horizontal axis is the percentage of features which are provided out of the total number of features which are available. In this instance, it's circa 500. On the vertical axis, it's the average value of the features which are provided. So ultimately, what we're trying to understand here is the decision making around the features which are currently in existence. So we can see that there's a big gap between CBA and ANZ when it comes to the proportion of features which are provided. And so that's one of the key things which is going to drive the score. What's also interesting, though, is that as you increase the number of features that you offer, it becomes more and more difficult to stop the average feature value from reducing because of the law of diminishing returns. But CBA have managed to maintain that average feature value in and around the overall average, which is a positive performance. Whereas for ANZ, they really should be much higher in terms of fewer features that they're offering, but the features that they're offering are of much higher value than what CBA are doing, which is not the case. So if we dig into it even further and we have a look at ANZ and what's happening, we can see that of the 433 features that were audited within these environments, ANZ have 253 while CBA hold 319. So straight away, there is the proportional difference that we talked about on the previous slide. But another thing which is important is when we look at the actual websites, before you log into the member environment, what are they saying about what you can actually do when you log into that member environment? So we can see that ANZ are very feature orientated. So they talk about viewing statements and transactions, seeing interest and charges summaries. So they talk very much about the different types of things that you can do. Whereas CBA takes much more of an action orientated rather than object orientated benefits. So they talk about freedom, choice and control, the ability to manage your life, manage your health, financial health and well-being. And so it's from a much more emotive space. And don't get into that area of the specific features that you can complete, because they're innovating and bringing out new features all of the time. And then what they will do is they will use a marketing platform in order to push out new features which are novel and will set CBA apart from their competitors. So let's look at ANZ customers and let's look at CBA customers, specifically from the actual overall 1,000 people. In terms of the top 10, we can see where there's gray between the two columns. This is where we have commonality of the features that are important. Where it's highlighted in black, this is a feature which is specific to ANZ customers or CBA customers that is not shared with the other customer set. So essentially, the unique elements in black are showing us where these customers are different. So for example, the ability to log in using a PIN on the mobile app for ANZ customers is particularly important. The ability to manage advanced payments, or the ability to set up, modify and cancel reoccurring payments. And so what we can see from the audit that we've completed is that there are certain elements that ANZ haven't provided within the member environment. And there are also specific features that are important to the ANZ customer that they actually don't detail on their site in terms of these are the reasons why you should get into the member environment and interact with the self-service experience that we have provided for you. So understanding what it is that your customers that you're designing for want is critical. And so if we now look at this all in, I take a snapshot of 100 features and we look at them specifically just for ANZ and we populate them on a chart of desirability by importance, we can see for the ANZ customer, high desirability and high importance is the ability to see all accounts balances in one place in one area. And that's what WESTPAC are doing before you even log into the app. And they've also made it that you can tailor the view that you get before you log into the app. If we look at what's high desirability but low importance, we can see the ability to open a savings or transactions account online. The example is provided by Monzo. If we look at low desirability and low importance and camera pay, this is an example that comes from CBA. So in terms of where they're going to innovate, they could go and innovate in camera pay, but really they wouldn't be getting bang for buck in comparison to what they might be getting if they go in and they innovate in the areas that are much more highly desirable and important for their own customers. Another example of low desirability and low importance is voice banking with Up. And so we're seeing more and more of this coming into the marketplace. So connecting the marketing component with the digital innovation component means that we are designing and implementing important and desirable features which we can then shout about because we know that our customers are interested in that. And so, as I say, understanding what it is that your customers want is extremely important. So if we step back though and we say, okay, let's see overall the top 10 most important features that ANZ don't provide, that their competitors do provide. What are they? And let's look at innovation and prioritization from this point of view. So to give you an example of some of these features, the ability to set a debit card PIN on desktop online banking portal, the ability to set the same thing in the debit card PIN in the desktop online portal, and the ability to view international payment limits in a mobile banking app, the ability to change daily international pay limits, e-bill, photo bill, and then users able to set the level of authentication required in order to log into an account. These are some of the key elements that ANZ don't provide, and then a view of some of the providers and competitors who do actually provide these. And so that prioritized roadmap that we talked about, understanding what is it that people actually want, taking a view of what are the different types of things that we could do are in terms of, let's say it's the 433 features that I highlighted earlier on. Where did those features sit in the journey in terms of what it is that the customer is actually trying to complete when they're self-serving? Is it security? Is it about cards? Is it about saving? Is it about account information? And so as our teams internally work in specific areas of the experience, knowing what elements of the experience are important, creating that contextualization around the category of experience that we're trying to innovate for is very important. So I showed you a view of the top 10 features that ANZ don't provide that competitors do provide. But if we take this contextual view and say, well, actually, we're interested in security, and we look at the feature audit, what are the features that we don't have? What's the potential opportunity which exists if we were to look at security? And so we can see here that the green bar in the chart in front of us is the feature opportunity which exists. The height of the bar is the overall weighted importance of that particular category based on the weighted value of the features which sit in that category. So straight away, I can see security is important and somewhere where I might want to innovate. I can also see that cards is important. I can also see down the bottom right that bundling is also important. Maybe not so much in terms of the overall weighted importance of that category, but definitely opportunity there, as I currently hold none of the features which exist within that subcategory. So if we look specifically at security and we talk about what are the features we don't provide that our competitors do, we can see things like biometric login options, the ability to reset internet banking password from the mobile app, the ability to reset forgotten password with no need to talk to the bank, strong authentication required for personal detail changes, the ability to set the level of authentication required, and then the ability to change the level of authentication required to complete key tasks within my account area. So we can see examples across CBA, WESTPAC, up in N26. So we're looking at a very particular picture in terms of who is doing what and what's possible. So some of the examples to show you, based on the specific criteria that we've just highlighted, what we can see here is how CBA have brought out location-based type security to protect the user and alert them to suspicious activity. We can see that Suncorp have provided a digital safe on their app, which is a place where documents can be saved into a safe folder, can have nothing to do with banking whatsoever. So a driver's license, a birth certificate, a marriage certificate. And then we can see an example from WESTPAC where in order to make a change to an account, we have to get an SMS code sent to our phones, and then we use that SMS code to change personal details. We're now seeing greater use of the Authenticator app, which is available from Microsoft, where you put in authentication code when you want to make a change. And so you can, for anybody who uses Xero, and that is a classic example of two-factor or three-factor authentication. Some of the other things that WESTPAC are allowing in terms of setting levels of authentication, users can set daily pay anyone limits on the mobile app or on the mobile banking portal. And you can update contact details, as is suggested earlier on, and send an SMS before that update is completed. And then customers are able to change the residential address, add another address, change contact phone numbers, update email address, and then all current personal details are recalled, and it's an instant update. So when we asked 1,000 banking customers, why did you rate the ability to set the level of authentication required in the mobile, desktop and native app member environment or online banking environment, why did you rate it as importantly as you did? Some of the key things that we got coming back were that it gives comfort. So the ability to manage your own, and that there is a security setting there that allows you to tailor it to your own needs, but ultimately the idea being that security is something which is taken very seriously. Some of the others came back and said, well, it's just an absolute priority to me, 13%. Another 13% that offers control, so that the piece around personalization and tailorability. And then 9% talked about the concept of choice. If we take it verbatim, it says, I believe it is a necessity to set the level of authentication when logging into your account to increase security and protect your finances. So that's the second section that we're going to talk through, and now moving on to the third and final section. So what current trends are driving new experiences for customers? So one of the things that our clients in banking are very interested in tracking on an ongoing basis is the degree to which customers are open to their banks providing advice based on spending habits and tips, and moving towards that concept of also providing goal-orientated functionality within the member environment. So we're talking about, savings, and we're talking about tracking spending and trends. So a key question is, how would you feel if your banking app or internet banking provide you with tips and advice based on your spending habits? And we see 30% saying that they would be happy with the help, 6% encouraged to reach their goals, and 9% that my bank is adding value to me. But we're seeing that over half, so 52%, are negative towards this concept. And so what we want to do is we want to track that on an ongoing basis, because another side to that same story is the banking or the financial management apps, which are growing in popularity in terms of the number of people who are downloading them, like Mint, like Pocketbook. And so what we want to understand from this sample of 1,000 is how many are actually downloading these apps, interacting with them and using them to manage their daily financial needs. And so again, we can see that, you know, the majority, 47% are coming back negative towards the concept, or you know, how strongly they agree with, I actively use personal finance apps to help me manage my financial life. 29% are neutral, so they have no opinion, but we have a much smaller figure who are positive towards this idea of using these apps to help them to move forward. So that potentially creates an opportunity in the marketplace if we have 48% who are largely positive towards this, but yet we have a large proportion who are not downloading financial apps in order to be able to do this type of thing. And so that there is a gap there that the banks would be naturally placed in terms of developing functionality which allows people to do this, and essentially to keep that engagement. Because now with things like open banking and GDPR, the ability to be able to bring a HSBC app or bank account into your Barclays app is now possible. And so that you would never have to interact with your HSBC bank account again through the HSBC app, because it can all be done through Barclays. And you know, that single view in terms of net wealth is becoming more and more important, and it is now possible with things like open banking. So on screen, we have an example from Frollo, which allows users to add savings accounts challenges. So some of the things that they're doing is interesting in terms of gamification, in terms of leveraging concepts of social. And what we can see on here on screen is that this participant or this person has decided to create a challenge where they're going to save money by lowering their spend on Uber. And so what Frollo allows you to do is to take challenges that have been set up by Frollo or by others, where it's going to help you to reduce your spending, to see who else has actually taken on that challenge. So the example on the right-hand side here on screen is that continuation of the Uber challenge, where we can see that the target saving is $26, that 35 people have actually taken on this challenge, and that there is a 46% success rate. So tracking progress of your savings challenge in an easy graphical representation, and make changes to challenges at any time. Implementation of gamification to drive engagement, and you can immediately see what the impact is in terms of your overall finances and managing your spending. So they also offer spending alerts. You can track spending by merchant, and you can easily see any spending increases. So Frollo are doing a lot of interesting things in the area of terms of managing finances. Another thing that they're doing is making you aware of when particular types of subscriptions are due. So for example, on screen, we can see Netflix was due 2 days ago. And that next step, which is the ability to be able to actually cancel your Netflix account straight from the Frollo app, which is quite powerful if you think about it, that you don't need to go into Netflix to cancel, and that it gives the person who's using this app a massive amount of power in terms of being able to manage the different subscriptions that they have across different types of services. So looking at some other financial management apps, Pocketbook allows you to add spending caps. Users have the ability to track spending and receive spending limit notifications. And so there's an example where we have reached your safely spend limit for food and 7 days to go. And over on the right-hand side, something that we're seeing more and more in banking is that this idea of managing finances has been around for a while in banking, but one of the challenges was that it relied on the users categorizing what the actual spend was, which was time consuming and constantly needed to be updated. Well, this example from Up shows how that categorization has become more automated, as has the identification of who a merchant is, so that you can clearly understand where that spend was and also track it back to the location of where the actual spend occurred. So the APIs and what's happening in the background in terms of how data is being collected is becoming an awful lot more sophisticated, which means that, you know, we can provide location-based services which can, you know, identify if a purchase has been made in an area which is outside of the area you typically spend a Monday afternoon in, then it can alert you that potentially there's fraud activity on your account. And so that's a functionality that Lloyds have recently released. So there are lots of different types of innovation on the fringes, I believe, that some of the more traditional banks would do, because they have, you know, the innovation which could potentially cause major issues because it hasn't been trialed and tested properly. They have less, I suppose, flexibility in terms of the forgiveness that they'll get from their customers in comparison to maybe someone like Revolut and the customers of Revolut. So it's interesting to see where that innovation occurs, and it can occur in the center or on the fringes. Here's an example from Monzo in terms of shared expenses, and they've taken that social media and social networking approach. In terms of the shared expenses, you can share expenses with anybody who's in your contact list on your phone, and the way it's set up is similar to WhatsApp in many instances. And so then we look at CBA and that single customer view with regards to net worth. And so we can see property, super shares, and other. And then this new element that they brought out, which is called cash flow tracker. So I can set it up. It gives me an indication of how I'm going in terms of my monthly cash flow. I can also set up savings goals, and then it can give me total spend by categorization as I move through eating out, utilities, and groceries. So more and more we can see that the financial institutions are trying to move to this financial health management scenario. And that becomes very interesting when we then start to think and talk about concepts like the marketplace, which is what we can see banks like Starling doing. But that's a conversation for a different day in a different session. So finally, my last section is around digital enhancing experience for the future, and not thinking about that prioritized tactical element that we've talked about already, but really starting to talk about, well, what does digital actually bring? What is possible? So obviously we are in the middle of a pandemic, and that has put a huge amount of pressure on contact centers and branches obviously being closed. So a couple of examples of what we've seen happening recently. So Nationwide closed down call centers and branches over weekends and evenings. JP Morgan offered call center staff a $1,000 incentive to keep working, and Barclays are paying frontline staff triple overtime to ensure call centers are fully satisfied. So ultimately, those who had a strong platform from a digital maturity point of view coming into the pandemic would have had the infrastructure available in order for them to be able to dial that up, to scale that up when these systems of, I suppose, the more traditional ways of interacting with the bank become overwhelmed. So the call centers and the branches no longer available, and people not in the call centers because some people are out sick or people are quarantining. So the first element is, where are you actually at the moment in terms of the sophistication of your platform? And a lot of that is actually going to come down to the culture internally in the organization when it comes to things like digital maturity and innovation. So the key point, I suppose, that I'm trying to make and I want to make is that digital innovation and development of the digital maturity is something that must be driven by culture in terms of senior-led team who understand where this could bring the institution and what it ultimately means for the business in terms of how the experience can be enhanced for customers based on using digital. For example, I'm recently looking at how Barclays and NatWest are now offering video-based calls for setting up accounts, for dealing with mortgage queries, and that there's a belief that this is absolutely something that is going to become more common, and that the banks will be offering digital or online calls with regards to being able to get various different types of account queries sorted. So an example I wanted to share with you is a company called SinoClaim, and they are an insurance company that are Dutch, and they won an award a number of years ago for this solution, SinoClaim, that they have introduced. And so what SinoClaim actually does is it's that end-to-end process without actually needing to talk to anybody. It's that straight through process, which delivers not only a better experience for the customer or the prospective customer, but ultimately actually delivers greater efficiencies for the organization itself. So that cultural concept of we need to be more digitally mature doesn't just go with that idea of it's because we needed to have a better experience. It's also, what is it actually going to bring to our business, and strategically, why are we looking? Then that starts to derive those kind of questions of, well, what are the different components that we need to think about of how this is going to impact the other parts of the organization. So what does SinoClaim do? Well, 60% of their claims, more than 60% of their claims, are now dealt with automatically. So what happens is you report an event. You've had a car accident. You go into the system, which is event driven, so that when you report the event, you start to do different things like taking photographs, uploading those photographs into the actual system. The members area offers emails, calendars to document the claim, and also you can invite the other party into the platform to share what their photographs are and their sides of the story. So while details are being entered, a real-time fraud check is carried out, and then the key impacts on your policy are communicated pretty much immediately through the member area. Automatically, it then starts to make appointments with a body shop which is close to you in terms of location or where you live. Of course, they give you the opportunity to decide if that's something that you want to do, but ultimately that's happening in the back end without you needing to do that. You can track your claim through the whole entire system, and all of this can be done without needing to talk to anybody on the phone. And so a lot of the other components in terms of usability and best practice design are in there as well. So it pulls forward information based on who, on what they know about you. They use conversational design and virtual assistants in terms of filling out applications rather than actually having full application forms. It's a very smart system, and it delivers that straight through process in terms of end-to-end journey management. Another example, and my final example here, is from KBC, which is an Irish, well, example is from KBC Ireland. KBC are actually a Belgian bank. And so this is for the opening of, in Australia, a transaction account, in the UK, a current account, and in North America, a checking account. And so they, in KBC, had to rework internally their thinking about how they wanted to deliver experience in order to be able to achieve the example that I'm about to share with you. But because the executive team was behind it, and there was a culture shift internally in terms of what does digital mean for this business and where is it going to take them, they were able to achieve the development and deployment of this solution within an 8-month period. So what we have is an account where you start off by taking a photograph of yourself, then you take a photograph of some identification, and then you move into a virtual chat with a chatbot, which is essentially the application form which helps you to get set up. While you are completing this, in terms of the different components, they're doing an ID check with the ID checker and in the photograph that you've just taken of your ID, and then they're also getting in touch with Apple Pay and Google Pay and issuing a digital card to your account so that you have a card straight into your Apple Wallet, which means that you can start using the bank account straight away. You don't need to wait a week or 3 days for the post to arrive with your card. And then finally, they put money in the account to incentivize people to start using the account. So the vignette that the guys in KBC give, or the analogy, is that you could be standing at the back of a queue in Starbucks and you start the process, and by the time you get to the top of the queue in Starbucks, that you will have money in your account from KBC, and you will be able to pay for that coffee with money in the account from KBC. And so it is novel and it is innovative, and Monzo is an example of somebody who's doing something similarly, but we're definitely seeing the growth in this type of digital experience, which drives a totally different type of business in terms of onboarding customers and the experience that you provide to them in terms of who you are as a brand and a bank when it comes to the digital experience that you offer. So in conclusions, first of all, understand your digital maturity first means understanding your customer. Digital self-service feature innovation is a long-term strategy and should be approached systematically, not piecemeal. Experience expectations are increasingly being set by new entrants and those moving over from other sectors. And so we always need to keep an eye on what it is that we're seeing in other areas. Mature digital services provide more than a novel experience. They enhance the experience for the customer while improving the bottom line. So it's important to understand the desirability and importance of what it is that you're looking to innovate. There is much more that we've not shown in this webinar, and the Banking Compass study is going live in field in a matter of weeks, and it'll be focusing on North America and in Europe as well. And so if you have any questions or you'd like to know how to participate in that, please do reach out and get in touch. Thank you very much for your time. I hope that this session has been insightful and informative. And of course, if you have any questions, please do reach out to us.